What a crazy week for SoFi. The earnings call last Monday seen SoFi stock drop, and by Tuesday morning the stock was down over 15%. But there is far more to this than meets the eye. I am more bullish than ever on SoFi stock, and in this video I will tell you why. This is a must-watch video for SoFi investors, and I will look at why SoFi could eventually challenge and outperform major US banks. If you find any value in this video, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 400 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new updates. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now there's a lot to discuss, so let's get into it. With first of all explaining how SoFi is different from normal commercial banks. So SoFi is a fintech that offers a range of lending and wealth management services. The company primarily caters to early stage professionals and offers variable and fixed rate parent, personal, and MBA loans, mortgage refinancing, and more. They create modern financial products and services that help people borrow, save, spend, invest, and protect their money better so they can achieve financial independence and realize their ambitions, which could be owning a home or saving for retirement, paying off their student debt, and much more. So SoFi is a fintech company that is positioning itself as a one-stop shop for all your personal finances. Now, I see so many people commenting on SoFi, calling the company a startup and treating this like a company that was just founded. But SoFi was founded more than a decade ago in 2011, and a lot of people seem to be thinking that this company has only really existed since going public less than 4 years ago. But the fact is that this company was a decade old before it was listed on Nasdaq. It's still a growth company with huge potential and still at the very early stages when you consider a banking and where you consider digital banking is at the moment. But this is not a risky startup that is only in its very beginning. This is well established. And fintech is one of the most promising megatrends which will disrupt the way we go about obtaining financial services. So considering the promising fintech industry's prospects, together with SoFi's strong execution, I think that the company is poised to become a notable player in the evolving banking industry. SoFi stock is considered by many as a strong buy because the stock looks deeply undervalued from the forward PE perspective and when compared with other fintech companies. So as I said a moment ago, if you've not been following the company over the past few months, you might think that the stock is dropping because the business is doing badly, but this is not the case. When we look at the latest investors presentation, this presents a very different picture of the company. In fact, this is a company that is doing extremely well with regards to almost every sector of the business. New member additions have increased every single quarter since the company first went public, and there is no sign of this trend slowing down. I had predicted 8.1 members in my SoFi earnings preview discussion, and new members has now increased to 8.1 million members. So too has new product additions, with this increasing at a rate of 38% year over year, up to 11.8 million. And if you consider the effect of year over year compound growth, you will see that just the last quarter alone there was an increase of 888,000, which is close to the entire full year 2020 growth rate. So in real terms, the company is now growing per quarter what it used to grow in an entire year. And as these numbers get bigger, so does their overall impact. But now this is very important. They have a lot of new members, and they have a lot of new products that they can provide to these members, which gives SoFi the opportunity to cross-sell its products, which has so many benefits. Like they can cross-sell products to existing customers. That means they achieve additional revenue without spending a cent in additional costs. So if you think about this from a financial point of view, in very simple terms, the revenue goes up while costs come down. This is exactly what you want to see in any business, not just in banking, not just in SoFi, but in any business where they can increase revenue while decreasing costs, they are onto a winner. Which is why lending and financial service products are all up too. The company has posted their best returns to date. Again, this is exactly what I predicted in my earnings preview video. Financial service products going above 10.1 million and lending products increasing to 1.7 million. Now on the financial side, things are just as impressive, but this is where there seems to be some confusion amongst investors. SoFi's Q1 report has spooked some investors who had seen a drop in quarterly adjusted net revenue and quarterly adjusted EBITDA. And this did cause a bit of a panic when the earnings data was released because these figures had been growing every single quarter, but then Q1 seen a small pullback. So first of all, let's remember that SoFi had guided for between 550 and 560 million. So 581 was a huge beat, but because Q4 2023 had been so incredible, it makes it look bad. But now, it's not bad. As the saying goes, the trend is your friend, and SoFi is still very much on trend. And it's the same scenario too for the EBITDA. Q4 23 posted $181 million, and that was 85 million above the previous quarter, which was insane. That kind of quarter over quarter growth is not sustainable, as we all know, but the 144 million recorded in Q1 is still 50% above Q3 23, which is fantastic. As I said a moment ago, the trend is your friend, and this trend is still going upwards. And EBITDA margin of 25% is also the second best quarterly margin in over 2 years. Like going back 2 years ago, this was only $9. However, in the most recent quarter, we have 144 million. I challenge anyone watching this video now to work out the percentage EBITDA increase from Q1 2022 until the most recent quarter and comment it. I would bet that so many of you watching this video will calculate the percentage increase wrong. Comment down below. The numbers here are insane, and this is shown with SoFi posting back-to-back profitable quarters for the first time ever. SoFi has now turned that corner into a profitable company. But management has also guided for Q2, and again this was seen negatively because they have guided for between 555 and 565 million net revenue, which would of course again be a decrease. But it's important to remember that SoFi have never not beaten revenue guidance, and by quite a lot. This is what they do quarter after quarter. They guide on the lower end and then they absolutely smash expectations. Now, it is far too early for me to be giving my expectations for Q2, but I will be shocked if I am sitting here in July and looking at anything less than 595 million for revenue and EBITDA of at least 151 million. Now, this is far above the EBITDA that SoFi have guided for, which is between 115 and 125, but there is a long way to go until July, and I will update more on this in the coming weeks. So if you want to see more SoFi updates, make sure you like and subscribe. As I always say, 400 likes shows me that you want to see more updates. And also, I'm considering starting up the Discord again with the focus of high potential profit growth stocks. If this is something of interest to you, let me know in the comments below. As I've been saying since the share price drop after Q1 earnings, there is now a massive opportunity again, one that I didn't think we would see again in 2024. The market is focused on Q2 guidance, which indicates a decline in SoFi's top and bottom line, rather than the long-term potential of the company. SoFi's engagement across its ecosystem is expanding, with record member growth, increased deposits, and growing number of products used by members. And we've seen that when we looked at the investors' presentation, the trend is very, very bullish for SoFi on every metric. But this is important. It seems as if the street and shorts are focused on Q2 guidance, which indicates a quarter-over-quarter decline in SoFi's top and bottom line, rather than management increasing guidance for 2024 and delivering on their objectives. At this point, you either believe that SoFi isn't just a bank and can deliver on its critical success factors, or you view it as just a bank. There was nothing in the earnings report that made me less bullish, because all the pieces of SoFi's long-term plan are coming together. It may take longer than many would have liked for shares of SoFi to get back into double digits, and I believe that the market is missing the bigger picture when it comes to SoFi. Now, while I'm bullish on SoFi, there is significant risks to take into consideration. SoFi faces competition from industry juggernauts such as JP Morgan or Bank of America, and many of SoFi's competitors have the means to compete for the younger generation. So it is a case that SoFi needs to keep innovating quickly to stay ahead of this competition and continue their growth. Now, this article looks in detail at some of the points that I've already spoken about, so there's no point in going over this again, such as the expanding engagement across SoFi's ecosystem, or the fact that SoFi did deliver an incredibly strong start to 2024, regardless of whether the market agrees or not. If you do want to have a read of this entire article, though, there is a link to this in the description below. Check it out at Seeking Alpha. And if you're new to Seeking Alpha, you can click on my link, which is in the description, and get a discount from the current market rate. Now, too many people are focused on instant gratification and are looking 3 months in advance rather than the longer term guidance that management has provided. Anthony Noto didn't just provide 2024 guidance, he said that SoFi is on track to generate between 55 and 80 cents of GAAP EPS in 2026. For 2024, SoFi is expected to generate $2.43 billion in revenue at a 17% growth rate, $600 million in adjusted EBITDA at a 25% growth rate, and $175 in net income, which would work out at 9 cents of diluted EPS per share. Not only is SoFi profitability trending in the right direction, its adjusted EBITDA margin continues to expand and is expected to be 25%. This probably won't be the last guidance revision in 2024, and I expect SoFi to continue delivering its vision while rolling out new products and executing on its critical success factors. But how to value SoFi correctly is an issue that many people seem to debate. Some want to value it as a bank, and others want to value SoFi as a tech company. But what differentiates SoFi from traditional banks is SoFi's tech platform and being vertically integrated. SoFi owns the entire backend when it comes to the underlying technology banks operate on and is building out banking as a service. Therefore, SoFi has put itself in a position to streamline its own products and reduce their operating costs because they own the backend platform. Over the next 5 to 10 years, SoFi could scale this into a large software as a service business by offering banking as a service. This is why SoFi isn't just a bank and why a hybrid model is justified. Now, the conclusion of this article is that there is so much potential for SoFi in the future, and it feels like they are just getting started. And let's not forget that SoFi continues to strengthen its company. They also eliminated more than $2 billion in debt from the balance sheet and are offering more new products to its customers than ever before. I expect that this won't be the only guidance increase that Anthony Noto delivers in 2024, and based on the midpoint of his 2026 guidance, shares of SoFi are trading around 10 times 2026 earnings. SoFi has many levers it can pull, including entering small and medium business banking, building out its asset management division, implementing 401 and 403b custodian services, and pioneering the banking as a software space through its technology platform. But what do you think? In my opinion, there's a lot to be bullish about in both the short term and long term for SoFi investors. But this is, of course, just my opinion, not financial advice. Now, there's a lot of talk about SoFi stock on social media right now, and there has been for months. But always do your own due diligence. I might not be a financial advisor, but if you enjoyed this analysis, then please like and subscribe. When I get 400 likes and comments, I will do another SoFi update where I explain some of the little known facts about SoFi that will have a huge impact on the stock price in 2024. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next update. All links in the